Well, hello everybody, welcome back to another Forex market analysis session. And in today's video I will talk about Euro-Canadian. Okay, let me open that. You see my pairs portfolio here. If we have some drawings there, this means we have some patterns running or some potential patterns emerging. Okay, let's go to Euro-Canadian. Here's the crab pattern that I'm looking at. It was found this way, C to X, and the pattern emerges. Okay, what are these lines? We have AB equals CD movement. It's actually extended AB equals CD. I suppose it is 2AB equals CD. Then we have the BC inversion of some extension, and then we have 161A X to A extension as well. So this is the classic harmonic approach that helps us identify those potential reversal zones within which we should look for some signs of reversal or some confirmations. Okay, so I will talk mostly about those confirmations. So what is this confirmation? Suppose we have some candles running to the upside. The first thing I need to do, I need price action to hit the last line of this box, the last line of potential reversal zone. Well, if you wish to get some numbers, let me switch my indicator to arrows. Price is PRZ. Okay, and we'll get the numbers, the three levels. Okay, here are the three levels. This is 224 AB equals CD. This number is large crab XA, 161A XA, and this number is the BC inversion. So they are colored. So the main number is 161A. It is black. This number should be crossed for sure. The pattern is not completed if it doesn't cross that line. Okay, so let me delete that stuff, unnecessary stuff. My rule says that the price should hit the last line, and the bar that crosses that last line is called the terminal price bar. Let me draw some terminal price bar. Suppose it is this way, looks this way, and it is green or whatever color it may be, red if it is a bearish candle. Okay, suppose we have that terminal price bar. What's next then? Then I stretch my Fibonacci's from A to D to that terminal price bar, and I look at this level 1.4890 and 1. So this is the high of this terminal price bar. This gives me the ceiling. So the next bar should close lower than that ceiling. See, this would be the trigger. If this happens, I enter at market. Okay, for example, if it closes somewhere here within the potential reversal zone, like this, suppose this is the close, yes, then I will place a limit order at the highest level of the potential reversal zone. So, but if it closes somewhere here, we have some spike, but we have the close lower than the terminal price bar high, and we are above the potential reversal zone, then I will enter at market. Okay, I hope you understood the technique. And now the question arises, as I am looking for the candle closes, what time frame should I use? This is very important. For example, if you use 1 hour time frame like this, so by the time you will get the candle close, all the pattern may already hit the targets and you just miss the opportunity. Or even worse, if you use that 4 hour time frame, you will definitely miss that opportunity if you will look for that confirmation of a candle close. On the other hand, if you are looking for the confirmation of 5-minute chart, this candle close doesn't tell you much because it's not very reliable candle close. it won't be any reliable candle close. So you should have an optimal time frame. Okay, so I've just calculated that optimal size of the pattern and optimal time frame, and I have elaborated the rule, so I will tell you the rule right now. The pattern should be more than 80 candles, like this. We have 50, this means we should switch to 15 minute. For example, if it completes here, then we should have that 100 will be okay. So I will be looking for 15-minute candles. Let me switch back to 30 minutes. You see that? Hope you understood. But it should be less than 160 candles. So if I switch that to 15 minutes, and for example the completion takes place somewhere here, I don't know, somewhere in future, the pattern becomes extended, something like this, and we have 169. Then I'd better switch to my higher time frame to have it around 80, like this, in case it completes more in future. How can I, in case it completes this way? So hope you understood that. Not less than 80 candles, but less than 160 candles. So if it is more than 160 candles, switch to higher time frame. If it is less than 80 candles, then you switch to lower time frame. So my trading time frame is 30 minutes. I try to look for the opportunity on 30 minutes, but my execution time frame is 15 minutes or 1 hour, depending on the number of candles I have. In this case, I will probably have 15 minutes because price is moving to the upside if it goes there and complete the patterns. Let me press the deleting key. Deleting key in my indicator is the letter S on my keyboard. It deletes everything. What I wanted you to pay attention is also this fact. Let me switch back. I like rectangles more. Okay, so if we draw this pattern like this, so we have one rectangle, one potential reversal zone, and if we draw the pattern like this, then we have a larger pattern that is called a butterfly pattern. Purple is a crab pattern, and gray is a butterfly pattern that also has that potential reversal zone that is a bit larger, but mostly it coincides with that, and stop losses also almost coincide. So what pattern should I take? This depends on your rules. To my rules, rule of thumb, I first identify the XA leg, and this XA leg should be shorter than the previous movement. You see the previous movement, and the XA leg should be retracement as compared to previous movement. In this case, we have XA leg, and the previous movement is shorter than XA, but it should be vice versa. The XA should be shorter than the previous movement, not vice versa. So to draw the pattern correct way, I should start it from here, like this. And even though it won't be valid, then I should start it from here. No, it's not enough. No valid patterns here to my rules. But guys, it all depends on your rules of swing identification and all your rules. I only trade reversal patterns, so I need a trend, and then I need a reversal of this uptrend to the downside. But here we have downtrend, yes, and then we will have a trend continuation, downtrend continuation, because XA coincides with the overall direction of an underlying trend. My rules say it should not coincide, it should be contrary to the overall trend, because I trade reversal patterns. This is the key. That's why I won't take this butterfly. I won't place my orders according to this butterfly. I only will trade this crab pattern, and I will place my orders according to what crab pattern says. It has a higher probability. So guys, once again, just remind you the clues of today's session. First of all, decide what should be your XA leg. This is very crucial, very important. Second, decide how many candles you should have, because it is very important to get the confirmation of candle closes. This is the second. Well, and the third, just continue doing the same and the same and the same until you get consistency. So hope you like this video. If so, give me your thumbs ups. Goodbye.